Section 2, Understanding the Concept. To understand the concept, you need to soak yourself in the process. What is technical analysis? Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities such as price movement and volume. Technical analysts believe past trading activities and price changes of a security can be valuable indicator of the security's future price movement. A technical analyst just has the work of trying to make sense out of the price charts. Like there are a lot of figures, candlesticks, like price movements at different times. So the ability to draw out a conclusion from the data is a big flex. Just so you know, in analysis, generally there's no right or wrong. You do you and pay the price, or you eat the benefits. Like you just have to do you. Like, oh, you see this pattern, if I see this pattern and I see this pattern, that means I should watch out for sell. Immediately you tell yourself something like that, you will not be like, oh, I want it to be at so time of the day. If it's between this range of the day, then it's a go ahead. So I'll just like keep on watching the chart. Immediately I see my validations, those patterns play out, I would know how to react at that moment. But if I don't see anything relating to what I'm expecting, I don't get close to the market. Like that's literally the work of a technical analyst, tries to make sense out of the price data. Now this is an example of the work of like some technical analysts. You will not be like, oh, if I see this bearish alignment, I would sell. Maybe if I see it in a particular price point, I would sell. Like that, the idea of we now trying to like make sense of, oh, if I see bullish around me close to like my price zone, that means I would buy. You get? We now trying to make sense of the random candlesticks we are seeing. Like, me looking at this without seeing the bullish alignment and the bearish alignment. Me looking at it without that indications on the chart, you'll be like, oh, what is this? What's this thing trying to say? But now, with the aid of technical analysis, we're able to now know that, oh, see you, this thing happens after this thing occurs. To try our best to like make sense out of the data. Technical analysis attempts to forecast the price movement of virtually any tradable instrument that is generally subject to forces of supply and demand, including stocks, bonds, futures, and currency pairs. In fact, some view technical analysis as simply the study of supply and demand forces as reflected in the market price movement of a security. Technical analysis most commonly applies to price changes, but some analysts track numbers other than just price, such as trading volumes or open interest figures. The work of an analyst is just trying to like make sense out of chaos, you get, out of randomness, make sense out of it and get rewarded when you do it well. Yes, when you do it well. This is another example in the structures, and they'll be like higher low. Okay, this is a downtrend, lower high, lower low, the L-ish, lower high, the LL is lower low, lower high, lower low, lower high, lower low. So you can see this is a downtrend. It keeps on breaking the lower low, lower low. It's breaking the lower low, breaking the lower low. That means it's definitely technical analyst that came up with this idea. He looked at the chart. Oh, whenever it forms a new low and price breaks the new low, there's high possibility that price would form another new low. That's the work of an analyst, like a technical analyst. You look at it and it makes sense out of nonsense. The chart is chaotic, it's random. You're trying to make sense out of that randomness. And once, I keep on saying this, once you perfect this act, the opportunities are just so much. Then, what are candlestick patterns? Candlestick patterns are an integral part of technical analysis. Candlestick patterns emerge because human actions and reactions are patterned and constantly repeated. In this section, you will learn how to recognize the most important candlestick patterns, the psychology behind its formation, and what do they indicate when they form in the market. From the previous time we talked about technical analysis, or we saw the bearish arrowman and the bullish arrowman. This is an example of candlestick pattern. It's an integral part of technical analysis. It's very important. Once you talk about technical analysis, candlestick patterns cannot be taken out of the picture. It's part of it. This is an example of an engulfing bar. I make use of this for my entry validation. It was pin bar or engulfing bars before, but when I was going through my documentation, I realized that the win rate with pin bars has been not really impressive. But most times when I go in with the engulfing coupled with my strategy, the result is just amazing. This reversal candlestick pattern consists of two opposite colored bodies in which the second body engulfs or covers entirely the first one. You get, it's a simple concept. They'll be you see this line over here, this line of your point of interest, the place you are waiting for price to get to, so that you see price reaction. Then you'll now be oh, if I see an engulfing in my point of interest, I would buy. Because if you can look, this looks like a support. This is a support, not that it looks like a support, because you can see the movement of price falling down, then it got to this support to bounce back up. You get? So exactly, the person will be expecting a bullish engulfing bar. Immediately, the person will just see this bullish engulfing now. He'll be oh, I can enter now. Enter. I mostly use 10 pips stop loss and I risk 1% per trade. So immediately I enter at this spot now. Boom, I risk 10 pips and I aim for 50 pips. Boom, I'm done. You get, this is just the simple concept. The stuff that gave me the assurance that, oh, there's an high probability. You want to be in the market where there's high probability for you to execute your entry. You get, you want the ball to be in your favor. There's randomness in this market. So literally that's the whole concept of technical analysis, candlestick patterns. Candlestick patterns are one of the most powerful trading concepts. They are simple, easy to understand, and very profitable setup. A research has confirmed that candlestick patterns have a high predictive value and can produce positive results. Pick these key points. Candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setup. I keep on saying this, there's no way you would go wrong using candlestick patterns. It's hard, unless maybe your psychology is not really that strong. your psychological balance will be triggered later on, then you overtrade or get triggered based on fear of missing out, or you like any random Forex bad days, you get. But if you can keep your psychology strong while using combination of multiple candlestick patterns, you can throw in an indicator to like support your idea, support your bias. Getting your psychology right and getting a good strategy goes back down to making use of candlestick patterns. This is another candlestick pattern, the evening star candlestick pattern. I rarely use this one, but there was a time I was so focused on this. See, you first see a bullish candle, a small bearish candle, and another bearish candle. So this is where that evening star pattern played. Like, the person marked this line over here as his support, as his resistance. I'm sorry, because if you can see or maybe a support turned resistance. As you can see from here, you can observe that it's an uptrend. Then this line now, I believe it's acting like a resistance. Then immediately the person saw his pattern formed around that is point that is expected that price would fall from. That's a confirmation. Then they will just place a century. It's that simple. The only problem we have is that most times we just can't wait for it. We'll be like, time is against us. This. Maybe you're trading for a props firm. You'll be like, 30 days, that's 20 trading days, it's not enough. This. But you fail to realize something, that as far as you don't lose anything to the market, you are profitable. Because immediately you enter a trade, you place a trade, you're at loss already. So for you to even keep your balance at the initial price or a bit above it, you're profitable. A prop firm will not take an account from you when you don't, like, apart from violating the rules. When you close like the old trading section, no prop firm will take that account from you. To tell you how powerful to be profitable means, simplicity helps a lot in Forex trading. I personally can't really switch to another method because I tried thousands of strategy and trading methods with no results. I know what I'm talking about. I'm not going to introduce you to a holy grail. This trading system works, but be prepared to lose some trades. Losing is a part of this game. If you are looking for a 100% winning system, I highly recommend you stop trading and go look for another business. There's risks everywhere. I calculated my risk to reward. I'm risking 1 to 5, and sometimes in a month I don't take up to like 5 trades. I don't take up to 5 trades. That means from that 5 trades, if I get to like win just one from it, maybe that month, maybe a particular month, I traded like 5 times. Because from documentation I realized I don't even trade. I barely trade up to 5 times in a month. But if I just need to like make one take profit and I'm covered for that month. I'm not ending that month in a loss. You get the concept now. I might, December, I was up 19%. I won 4 of my trades and I lost 1. January, I was up 3%. You get, then February was just on the 9th. Since on the 7th, I've been at 9%, just 3 trades. Like, I won the first one, I lost the second one, then I won the third one. Just 3 trades, I'm 9% off. So let's just proceed. This is a tweezer top. The tweezer top's formation consists of 2 candlesticks. The first one is bullish. It's a bullish candlestick followed by a bearish candlestick. And the tweezer bottom formation consists of 2 candlesticks as well. The first is bearish followed by a bullish candlestick. This is an example of like a tweezer top. this is where it was used. You get like this thing keeps on repeating himself. And funny enough, you can even use, maybe after I see like a tweezer button, then I see like an engulfing, I'll take a trade. Immediately you see this thing now, tweezer button, then you have seen an engulfing here. It's in your point of interest. You have seen your engulfing here. You take the trade to buy. It's as easy as that. You get? This is just the concept of like candlestick patterns. I know the reason why I have to like introduce it to you guys, and so that whoever does not have an idea, I'm planting that idea now. Like I'm planting that idea. I'm planting that seed for curiosity. You get? So let's move on to the next. What is fundamental analysis? Fundamental analysis is a method of evaluating the market that uses multiple data sources to find an asset's fair value. Unlike technical, which looks purely at price action, it builds up a holistic picture of a security's strength and weakness. Fundamental analysis. Immediately I hear the word fundamental analysis, it just like triggers the thought of the news traders and stuff like that. But generally, fundamental analysts make use of news, economical events, like a lot of things, countries' policies. They look at a lot of things like that, natural disaster, those kind of things. They look at a lot of data to determine maybe a country's currency fair value. They'll be like, after they're done looking at it, they'll be like, it seems like the dollar is weak because of the facts from their research. They'll be like, so since it would likely drop, I would sell on dollar. I would sell heavily on dollar. Then the person would sell. The person will be monitoring those policies, those facts, to see if the government are pushing to change it or if any of those facts are being fixed. That's when the person will know when to like opt out of that trade position. Like a lot of other people combine just news with technical analysis, but me, I don't really like put focus on fundamental analysis. I'm just like a purely technical analyst. This was the app I was using like in 2020 for news, because back then there was a props firm I was like trading for, and this was their like recommended apps. They were like, we're not meant to trade at some news events, so I had to like follow up, but I barely use it. It's just there on my phone. Then what is a strategy? Ever since before we got to this particular place, I've been making mention of a strategy this, a strategy that, this is happening, that is happening. A Forex trading strategy is a technique used by a Forex trader to determine whether to buy or sell a currency at any given time. Forex trading strategy can be based on technical analysis or fundamental analysis. That's news-based events. Me, generally, I see a strategy as your plan. I see it as a shield against the market, because the market is a battlefield. Like, if you don't see it like that, you know, the more you go to a battlefield, the probability of you losing your life, you get. So the more you face the market, there's a higher probability of you losing your account. So you can set it as part of your plan that, I only have to look at the charts at this particular time of the day, and maybe when I'm done taking one trade for the day, that's the end of it. You get? You can set those rules to like protect yourself against the market. A Forex strategy is just filled with rules. If you look at this chart, you must see this, it must be at this time of the day, you must use this stop loss, you must use this take profit, you must do this and you must do that. That's just the whole idea of a complete strategy. Some people just see entry and exit validation as their strategy. Strategy has a lot to do with your timing, your setup validation, your entry validation, your stop loss, your take profit positioning, like your shield, just the way that Christians use like Bible for their as their guide to go through the earth, and Muslims use their Quran as their guide to go through the earth. That is the way a Forex trader uses a strategy to navigate through the market. So, what is a trading psychology? This is the whole idea, the main reason for this whole project. This project you are watching now, this is the main reason for it. Trading psychology refers to the emotion and mental state that helps dictate success or failure in trading securities. Trading psychology represents various aspects of an individual's character and behavior that influence their trading actions. I personally see it as your level of composure during and after trading. The better it is, the best yet for you. So, the idea now is that a good composure is one of the best things you want to carry to the market. View the charts. Your composure, that's why they'll be like, oh, you lose because of fear of missing out, you lose because of greed, you lose because of revenge. Like, they'll be like, you lose because of your timing. If your psychology is right, those things must be in check while you are trading. If I'm opening the chart, I know that, oh, I'll first check, have it gotten to my time of trading, or has my time of trading ended? I'll just look at the time once, then I would open the chart. I'll be like, oh, has my point of interest set up validated? Then I'll be like, oh, okay, yes, okay, let me mark my point of interest, and I'll mark my point of interest, and I'll set an alarm for like when price gets to my point of interest. Then I'll now wait for my candlestick patterns. Then immediately I see it. Like, I don't kill that time. As I execute, I set all my parameters, my stop loss, my take profit. I already know where to place them. I place them right. Then I stay back from the market. I just use alerts so that in case like price gets to like take profit one, because I break even immediately, it gets to like 1-to-1. You get, so immediately it gets to 1-to-1, price notifies me. Then I go to my trading app, then I change the stop loss to break even, so I know that, oh, I'm running risk free and stuff like that. Like, that's just the concept. But immediately I open the chart and I see, my stop loss has been taken out. I just close the chart. I take one trade a day. Like, I take just one trade a day. Once I open the chart and I see that maybe I saw like a point of interest but later got invalid, I'm done for that day. Like, I don't want to stay back to like watch out for any other thing. Your trading psychology has to be right, has to be on point before you can like benefit anything, before you can really stand the market. You can see this guy over here is going through a lot of negative moments, but you can see based on he has a strong psychology. He's unbothered. This is you now as a trader. This is the market disturbing you. But based on the fact that you know what you are there to do, you would not even answer them. You would just go to your chart, execute what you want to execute, and you are like, you don't pay attention to the noise. You don't pay attention to the noise at all. You keep on going. Create composure. Like, we're about to place a trade on MetaTrader 4. So first of all, we would have to like create an account with a broker. So for this stuff, I'll be using SNES. I have to use like my phone to show you guys how to place a trade on the Forex market, because I always find myself executing mostly on my smartphone. I rarely use my laptop to like place a trade. I can use my laptop to like analyze backtest, but I don't just find it too convenient a lot to like use it to execute my trade, because most times I'm on my phone compared to what time I spend on my laptop. So let's proceed. I would open Chrome, like this app over here, this app here. So this is the SNS broker. I would log in. So I normally don't use SNS like that. I use more of FBS. So I'll go to like demo. Okay. Let's create another demo. I rarely use the SNS. So open standard account, try demo. So demo MT4. I don't use MT5. I don't like it. I love using 1 to 100 risks to reward. Let me say this. Your starting balance, maybe you found $100. Then type in a password. Okay. Account is pending. Okay, that has been created successfully. So actually, account information. So SNS try at 10. I've copied the account login. So we'll open our MT4. This the login existing account. SNS try at 10. Okay. Then this is the login. Let me input the password. This is your quotes. Let me say mostly because I only trade one pair, GBP USD. But maybe for this tutorial, I'm showing you things using Euro USD. So let's just continue using the Euro USD. I hardly use MT4 on my phone. Look at the chart interface for Euro USD. There's an indicator. So look at the chart. So imagine now, this is the quotes. Over here is the quote, over here is the chart, over here is the trade, over here is the history and setting. Simple or advanced view. I look at it now. This is simple, plain, just bid price and ask price plus the currency that you are trading. Then, but look at advanced now. Advanced will show you the low for the day, the high for the day, the spread, and the trading time you get. So let's proceed to looking at the chart. So I would love to buy you. So you would click on trade. Like you can just touch on the chart, then an option would appear, or you click over here, trade. Now once you click on trade, you'll see this interface. This place here is your lot size. Since it's a small account, and maybe you want to be risking 10 pips ish. You want to be risking 10 pips. That means that 10 pips should be 1% of your account. That means you do 0.01 lot size. Your stop loss now. To get your stop loss or take profit, let me say for example now, you want to buy at the current market price. If you see the current market price is around 1.06773, then I'll now be like, oh, I want to enter a trade of like 10 pips. That means I would enter the trade, then my stop loss will be 1.06679. That's 10 pips. I would minus 100 from the current price. Then if I now say, oh, I want my take profit to be 30 pips, I would add 300 to the current price. You get? Once you just do that stuff, you know the price that would get you to your take profit or stop loss. So if you move to the trade interface, you'll see market execution. Like automatically market execution that is selected first. I mostly use market execution. I don't really like the other ones like stop limit, buy limits, sell stop, buy stop, and stuff like that. By default, market execution is selected for you. So let me say we want to adjust our stop loss 10 pips 681, adjust our take profit 7081. So automatically I've set my stop loss, that's 1 to 30. So maybe we want to buy now, you would click on here. But if we want to sell, we'll click on here. But since we want to buy, we'll just click on here. Boom, we just enter the trade. Look at the trade, it's a buy. Look at the stop loss, then look at the take profit. The take profit is where if price gets to, we want to like leave the trade and take all the profit. But over here is like, oh, if price is going against me, if it gets to this price point, close me out of the trade. Like I don't want to take any more loss than this one I'll be taking here. You get? So that's just like the concept of like placing a trade. Then you want to be trading your stop loss and your take profit. Let me say price is moving in your direction now, because I break even 1 to 1. How to get to this place? From the chart, you click on trade, then to edit this trade now, you slide like this. You get? Or you just touch it, then click on modify, then that's taking you back to that place. Let me say if I want to move the price now to break even, my stop loss now, I would now add the 10 pips. That's, you would add 100 to it, so 781. But you see, it cannot modify because I'm currently in a loss. I get to like break even when price is at 1 to 1. You get? So that's the whole idea of placing a trade. You would have to know where you place your stop loss and take profit. This stuff now, it's just showed you how to like enter a trade, place your stop loss and take profit, and it created an idea on trailing stop loss and protecting your trade. I wish you the very best as you proceed with this course. The gem in which you have been waiting for, it's patiently waiting for you all in section 3. Have a lovely journey in the Forex market. At the end of each section, I tried to like create an evaluation system for you guys to know if you guys are really following up. You are in for something great. Watch out for section 3. A lot of insight, a lot of recorded videos present in section 3. Like, you get it, like it's that lively. Answer the quiz, send me your results so that I'll be able to like check your level of progress. And that's all.